Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Non-farm payrolls in the end came pretty much in line, just slightly higher than anticipated at 187,000. But what we did see was a big revision down for the June and July figures by around 110,000 combined. So it still shows a pretty reasonably sort of robust economy in the US. Certainly it is slowing down a little bit, but then it couldn't continue growing at sort of 3 to 400,000 jobs being created every month. The revision on the GDP figures was down a little bit as well, down to 2.1 from 2.4. So what does that do to the Fed's sort of thinking now? Potentially I think it does leave them on hold at the next meeting. And that certainly seemed to be implied by the comments that came out of sort of Jackson Hole with Jay Powell. The Fed is there, ready to act if needed, data dependent, really just trying to fight that inflation number. Quite interesting, the latest sort of stimulus measures coming out of China seem to have had a little bit of an impact, certainly on the housing market. Over the weekend, a couple of the big cities there saw some pretty major increases in the house purchases. Now, obviously, it's just a question of whether that momentum can be continued. Now, certainly US interest rates have nudged up really on the back of this spike in oil prices. So the 10-year is now 426, and the 2-year is sort of nudging against 5% at 495. Also, as well, a potentially sort of unnerving development with Kim Jong-un looking at visiting Russia. And, the talk is that Russia will sort of supply a little bit of food and stuff. And North Korea will now supply weapons and sort of software, hardware for the ongoing war in Ukraine. And certainly that alliance is really pretty worrying. Also, as well, Xi Jinping has announced that he won't be attending the G20 meeting in India. So as sort of mentioned, oil has spiked now to $86 a barrel. And that's really on the back of Saudi and Russia continuing with their sort of production cuts. Saudi is looking to keep in its sort of production, which is down about 1 million barrels a day. And obviously, for an economy that's really very dependent on oil, it's pretty crucial for them to keep oil above sort of $80. Certainly, when it was trading down sort of low 70s, their economy was struggling a little bit. And likewise, obviously, for Russia, it does help majorly with that Russian economy, which really is in dire straits. So no real surprise that Putin and Russia has agreed to production cuts. In the UK, it looks like the Bank of England is going to suffer some a little bit sort of higher losses on its bonds that it purchased to try and prop up the UK economy back in the GFC, and also during the COVID period as well. But on the positive side, it looks like they've managed to skirt around a sort of potential $56 billion top up to the European budget after Brexit. And the EU region still sort of looking at bringing inflation down. And again, the ECB and Lagarde came out with sort of comments that you really would expect. If inflation remains high, they'll be looking to sort of hike interest rates if needed. The problem is that inflation is actually falling. It may not be falling as quickly as the central bank would like, but it is certainly on a downward path. Now in Australia, as expected, the RBA left rates on hold. But again, the sort of commentary was that, if needed, they would be prepared to increase interest rates as that fight against inflation. But again, inflation is falling. July number was 4.9, so that's below that 5%, and previous figure was obviously 5.4, and that's way off the peak of 8.4. And indeed, if these measures out of China really does sort of stimulate that Chinese economy, that will obviously be good news for the Australian economy in terms of sort of minerals and resources. Now here in New Zealand, quite interesting, sort of housing market has sort of been bumping along and potentially sort of reaching a bit of a bottom. And it's quite interesting. The latest data coming out of the Auckland auction market is really quite interesting. Auckland sales has its best month there in 17 months. Sales are up just over 20%, and also prices are up around just over 3% as well. So obviously as activity does start to pick up, that potentially could see a little bit more stock coming onto the market, and it'll just be interesting to see how that translates to the rest of the country. It's quite interesting as well, the latest ANZ business survey was up as well. Previous figure was -13, currently it's -4. So just maybe a little bit more sort of optimism, a little bit more confidence coming back into the New Zealand economy. You've got the Reserve Bank with interest rates, the official cash rate now on hold at 5.5%. And now many economists and analysts are now predicting the next move would be down. And possibly that could be as early as early part of 2024. Obviously pretty much in full campaign election mode now with the political parties. Latest poll was still pretty negative for the government, putting them below 30% on the popularity. What is quite interesting though is tourism is sort of picking up and about sort of 85% of pre-COVID levels. And obviously that was shown through in the latest sort of reporting season coming out with Auckland Airport and also Air New Zealand, showing some pretty encouraging results. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.